Now, if you're experiencing what's being termed the credit card hangover, well, you're not alone. Many consumers have blown their hard-earned money over the festive season. And January is looking rather bleak. So what are the big mistakes that cause you to max out that credit card at this time of the year? And if you've made financial well-being a New Year's resolution, how can you stick to it? Well, to help you with that, I'm joined in studio by wealth coach at TNC Wealth Partners, Samke Mhlongo. Thank you so much for joining us this morning.
Thanks for having me.
Such a ray of sunshine. You look lovely. So let's start by setting the scene.
Yes.
Who's indebted?
We're just having this conversation where, we're deciding who are we actually speaking to, because some of my strategies were sounding very middle class, but it is actually the middle class that is most over indebted. Why? We have the incomes and the pay slips to be afforded big lines of credit. And we tend to think that if the bank is sending me an SMS saying I qualify for X credit line, then I should be good for it. I should be able to afford it, right? That is not necessarily the case, because they may be measuring you just against the information they have. So you may have 4 different banks giving you the max that in totality you should be getting, and now you're 4 times as over indebted.
So all these SMSs that you get, we won't mention names, but people offering you 100,000, 200,000, it's all a trap.
I wouldn't say it's a trap, but if you don't know why you're taking out that line of credit, delete that SMS immediately. Because sometimes you like having that false sense of security of saying, just in case I need it. But your just in case I need it should be your savings, not someone else's money.
If you're sitting at home and you're saying, well, looking at it practically, I live far from work, so I need a car. So yes, I'll get a loan for a car.
Which is good debt.
Which is good debt. Or if you're thinking, well, it doesn't make sense for me to travel this far, so maybe I should get that property, but you still can't afford it, but you need these things.
Asset-backed debt, or debt that you take out to buy an asset which appreciates in value or helps you generate more income, is good debt. Debt you take out because your friend is having a baby shower and you want to arrive there with the latest stroller,
right,
at 3,000 Rand, is not good debt. So if you are taking out debt that will help you in the long term get a return on that debt, that is good. Go for it, subject to affordability. If you're taking out debt because it's being offered to you and a year down the line you're sitting and thinking, how did I get into this position? Then you probably shouldn't have done that, and you probably shouldn't be making some of the mistakes people tend to make every year.
So what are you saying I should do, Samke? Come December, I earn 5 Rand, and then I get another 5 Rand on top of my 5 Rand, so I've got 10 Rand, right? And I need to now pay back the money that I've been loaning for the entire year. Come January, I'm broke. Not that I've had a fancy lifestyle, but because, I'm not making that much anyway.
Well, come December, you shouldn't be thinking about December or January spend, because in fact, when I was at the bank and my high net worth individuals, I would see that they plan their lives 6 months in advance. So if you don't know where you're going these Easter holidays or June holidays, even if you've got children or if you're like traveling or taking leave at that time of the year, then you probably shouldn't be going anywhere, because by June, people are actually planning their December holiday spend, right? You should be buying your gifts during the year. You should be measuring your doing your annual review on your insurance products during the year. How many of us have done that? You should be making sure that your interest rate, you know what interest rate you have on each credit card or each line of credit, so you know which one is cheapest that you can draw from, or which one you should be repaying back and starting off with, because you need to start with your highest interest rate first. Okay, you should be avoiding, bad credit just for spend. I don't mind if you say to me, something, you know what?
Bad credit?
Bad credit is consumption or lifestyle credit, okay? You shouldn't be going to the Durban July, to the Cape Town Met. You shouldn't be traveling if you're doing it on your credit card that you will not settle the full amount due in the 30 days when it's due, right? You shouldn't be doing that. You should be planning ahead for that, all right? Otherwise, it'll be a perpetual cycle that you don't get out of, and you'll find yourself in what we call the debt trap, where every year you're falling deeper and deeper and deeper into debt, and you're taking out, now you start thinking debt consolidation, which has a very poor success rate, by the way.
Are we not being set up for failure, though? Like you mentioned earlier, you've got all these people flooding you with messages to say, come and get this amount of money. And then you do have people who say, well, I can help you consolidate your debt. So go ahead, spend, we can help you. So are we really not being set up for failure here?
Not at all. We are setting ourselves up for failure if we don't know how credit works and why we're using it. So debt consolidation is affordable, yes, in terms of your monthly installment, but in terms of the total interest you will repay because of a longer term, you're paying much more for the money you've borrowed. So get yourself savvy in terms of how finances work. Those tips I gave you, like even just reviewing your insurance policies, because if you've had an insurance policy for 3 years you haven't claimed, you really should be looking at lowering your premium, or if that asset that you've insured has actually depreciated in value, why are you still insuring it for the value that you took it that it was at when you took out that insurance premium? So there's little things you can start doing every year to develop yourself financially in terms of your financial savviness. Then you'll realize the financial system will actually work for your good and your development instead of you falling into the debt trap.
And if you're thinking, well, where do I go to find all this information?
There's a lot of reading you can do up. There's a lot of consulting you should be doing with your banker, your broker, your financial advisor, or even just starting with a bank statement review. Because Susie Orman says that the best financial advisor is the man in the mirror. It's actually not that complicated. Start with your bank statement. Any debit order you do not know, or you are unsure of, or you haven't reviewed in more than a year, pick up the phone that service provider and say, listen, is there a better option for me? It's as simple as that.
It sounds quite simple.
But it's scary to open up that bank statement.
100%.
I won't ask you when last you went through yours.
No, don't ask. I'm almost too embarrassed to say. But you know how we say that it's now January, as in you'll be worried. But then loan sharks are sitting there rubbing their hands, just waiting for people. Your advice for somebody who's saying, listen, I hear all of that and it sounds great, but I'm really in a fix right now.
My advice would be, if you're going to take out additional credit, right? Additional debt to get out of this position, set yourself a time frame. Say, all right, I'm going to be in this position for how long? If it's 6 months, if it's 12 months, if it's 18 months. And what will I scale down on, all right, in order to now afford this repayment? Because if already you can't afford your life right now, where are you going to get the funds to repay that debt you're taking out?
Right.
Okay, and if that cash flow is being released because you're consolidating debt and your total installment is now lower, guess what the average consumer tends to do with that extra cash flow? You spend it. Then you get comfortable with this new level of debt and you find yourself in the same cycle all over again. So trust me, I've been doing these January interviews 3 years in a row now with NCA. I can bet my bottom dollar I'll be here next year talking the same thing. What are we going to do differently this time?
Right, and that's the big question. Hey, like you said, the man in the mirror, so we need to look within. Thank you very much for your time this morning. Wealth coach Samke Mhlongo. Here's a reminder of your top stories this hour.